One thing that is not going down is gold. It's at another new record today, approaching $1,800 an ounce. Bullion is up almost 25% since January. For more on gold, we welcome George Milling-Stanley, Managing Director of the World Gold Council. He's here to tell us central banks are worried about the value of the dollar. They don't see the euro as a viable option. And yes, they are turning to gold. Our own Sara Eisen is here as well. George, the thing I love about you most is the fact that you can't predict the gold price. So we can actually get into a discussion about what's really happening in the market as opposed to punting on the future value of gold. Who's buying gold right now? Is it central banks? Is it private investors? Is it institutions? Is it all of the above?
All of the above is the answer, and it's increasing. We've had a bull market for the best part of 10 years. What we're seeing right now is yet another big jump up in the price over the last couple of days, prompted, I think, by the downgrade in the U.S., the likelihood of QE3 in the U.S., but also this growing appreciation for central banks, all the people that you mentioned, private investors, institutions, and so on, for the value of gold, the long-term strategic value. And the more the price goes up, the more people are convinced. It's a wonderful circle right now.
I'm interested in China. It has the most firepower, the heaviest reserve pile. What's it doing with gold?
Yeah, China is a little less transparent than some other countries. They tell us from time to time when they feel comfortable telling us what they have done in gold. The last time they told us was in April 2009, and the report they gave us then covered the previous 5 or 6 years. They'd bought a considerable quantity. The market believes that they're still buying, mostly buying local production, but also some on the international market as well. So I think that the market is looking for a report from China sometime within the next couple of years, and there will be an exponential jump in their gold reserves.
Why? Why are they all buying gold?
Because of the alternatives are really looking a lot less attractive than they have been. The dollar has been in decline for most of the past decade. Most people are predicting it will continue to decline. The euro was a reasonable option until about 3 years ago when we got the sovereign debt crisis in Europe. The euro is no longer the good safe haven option. Sterling? No, I'm sorry. The yen, not really big enough. So people are turning to a deep, liquid, global market in gold, and that's really what's driving the price.
George, our colleague Betty Liu is down at the New York Stock Exchange.
Thanks, Erik. George, is gold just being driven right now purely on sentiment, or is there any other factor? Is there an inverse relationship between gold and what you're seeing in the dollar, or gold and equities, or is it just on its own here?
My guess would be that perhaps the last $100 jump in the price, which we've seen over the past couple of days, that may well be sentiment given what's happening in the last couple of days in the international arena. But the bull market that we've had since we were at $250 10 years ago is very soundly based on the fundamentals of supply and demand. Supply is not going up. In fact, we've removed central banks as a term of the supply side. They've been a seller of a substantial quantity of gold to the private sector for 20 years. That's now gone.
George, there's no question it is a function of supply and demand. That's how markets work. The question is how sustainable that demand is, because if some of the underlying economic and market factors change, gold may become just as unattractive tomorrow or at some point in the not-too-distant future as it is attractive today. What happens then?
The gold price will go down when it becomes unattractive, but a lot of people have been predicting it would become unattractive for most of the past 10 years, and those people have been wrong. I don't think that it's going to turn unattractive anytime soon. What's going to suddenly get better in the world to make gold look unattractive? The dollar's not suddenly going to recover. Equities are not going to recover. QE3 is probably coming. That's what most people are telling us.
George, at $1,700 or $1,800 an ounce, do some of the reliable sources of demand, let's say the Indian jewelry market, cease to be so reliable because gold is simply too expensive for those people to buy?
Look, there is some sticker shock. There's no question about that. But India has just come through a better than average monsoon season, which means that farmers are starting to feel their prosperity. The marriage season is coming soon. Diwali, the Festival of Lights in October. We're about to run into peak demand period. So my guess is that it's not going to be quite as bad as some people are afraid.
George, so good of you to be here. George Milling-Stanley, Managing Director of the World Gold Council, saying that those who have bet against gold, yes, they've been proven wrong, and the sources of demand grow every day.